This episode is sponsored by ATL BitLab. ATL BitLab is Atlanta's Freedom Tech hackerspace. We have co-working desks, conference rooms, event space, maker tools, and tons of coffee. There is a very active community here in the lab. Every Wednesday night is Bitcoin night here in Atlanta. We also have meetups for cybersecurity, artificial intelligence, decentralized identity, product design, and more. We offer day passes and nomad passes for people who need to use the lab only occasionally, as well as memberships for people who plan to use the lab more regularly, such as myself. One of the best things about having a BitLab membership isn't the amenities, it's the people. Surrounding yourself with a community helps you learn faster and helps you build better. Your creativity becomes amplified when you work in this space. That's what I think, at least. If you're interested in becoming a member or supporting the space, please visit us at atlbitlab.com. That's atlbitlab.com. All right, on to our show.
So the purpose of this is, there's been a lot of discussion on the internet and, MicroStrategy. I'm going to give you a little bit of history of them, but the buzz around them has kind of coalesced around Michael Saylor has found the infinite money glitch. He's just creating as much money as he wants, and how the hell is he doing that? And so we're going to talk about what he's doing. Is it an infinite money glitch? Is it, sustainable? What's the bull case? What's the bear case? We're going to get into all that stuff. I'm going to try to do this at a very introductory level, so even if you don't know anything about stocks, you can still follow along. So here we go. So what kind of business is MicroStrategy? We're going to start here at the beginning. For those of you who've been in this and are already way deep, apologies for the basics, but we're going to do that quickly. So MicroStrategy is a business intelligence software company founded in 1989 by a guy named Michael Saylor. He had some partners and stuff, but really he's the man. He's still, to this day, the controlling shareholder. And what I mean by that is he owns more than half of all the stock. So all the stock that we trade and everything else that's going on and the whole CEO and the management structure, none of that matters because Saylor owns more than half of the stock. He controls everything. And it's really kind of a monarchy to some extent. And this is why he was able to go about doing what he's done at MicroStrategy. He doesn't really need to negotiate with anyone. He doesn't really need to build consensus. He pretty much what he says goes. And that's the reason why everything's happened the way it has. We'll talk about what that looks like. All right, so the stock trades under the symbol MSTR. MSTR stock was a high flyer in the dot-com bubble period, way back in the 2000s. It crashed 62% in 2000 during the dot-com bust under a cloud of accounting irregularities and SEC actions. So people basically wrote Saylor off for dead at that point, wrote MicroStrategy off for dead at that point, and said they're never, ever, ever again going to be relevant or hit a new all-time high. And it took 20 some odd years, but that's now changed. So MicroStrategy adopts Bitcoin 20 years later. After 20 years of consistent cash flows but slowing growth, MSTR stock was languishing in irrelevance. In August 2020, MicroStrategy adopted Bitcoin as a treasury reserve asset, initially purchasing $250 million worth of Bitcoin. In the years following, MicroStrategy has consistently added additional Bitcoin to its treasury using a combination of cash generated by the business, because they do sell software, stock sales, and corporate bond sales. And we're going to talk about all those. So, all right. How has MicroStrategy stock performed? I'll give you a hint. It's been pretty good or we wouldn't be having this presentation. All right. So in March of 2020, during the COVID crash period, like a lot of stocks, MicroStrategy, it fell below $10. Now, it was really 100 at the time because they'd gone a 10-for-1 stock share, but split adjusted, it's 10. It began a rally following its acquisition of Bitcoin in August 2020. In Feb 2021, MicroStrategy surged to 127, again split adjusted. So that was more than a 120x or whatever. So people were like, oh, and this was fueled by a short squeeze. I'm not going to talk too much about short squeezes tonight for those of you who don't know, but there was basically a bunch of people that were shorting MicroStrategy that thought they were idiots doing this Bitcoin thing, and they got their faces ripped off. So the stock surged, and this is a great time to have ridden MicroStrategy up from August 2020 to this 2021 period. I wasn't smart enough to be aware of it or into it during this time. I kind of was like, what's going on here? And I sort of learned about it after this.
That was GameStop.
And that was definitely during the GameStop and all that crazy time, all that was going on. So, however, in May to June of 2022, during the Bitcoin bear market, MicroStrategy fell once again below $20 a share, split adjusted. And then I kind of got interested and became aware. So we're going to flash back to the Atlanta BitPlebs meeting, which happened on May 24th, 2022, during the Bitcoin bear.
when I was leading a presentation, and I said that one of the topics tonight is how to get 129,218 Bitcoin for free. And that got everyone's attention. Like, how the hell am I going to get 129,218 Bitcoin for free? And I said, well, here's how. So flashing back again, market turmoil can create opportunities. So again, we're here in the depths of the bear market. MicroStrategy is a business intelligence, or I'm telling people about this company. Software business is profitable, generates consistent positive cash flow. They began buying Bitcoin in August 2020, and the stock was trading between 150 and 200. Now remember, this is pre-split adjusted, so consider that 15 to 20 again. After many Bitcoin purchases, Microsoft now owns that much Bitcoin, as we said. It reached as high as 1,000. Again, split adjusted, the 127 was 1,270 at the time. Due to recent market turmoil, MicroStrategy stock is now once again trading below 200. The stock price is close to where MicroStrategy was trading before they even began buying Bitcoin. So basically, you're just buying the stupid software company again, the boring, low growth software company. That's what they're trading at. And you're getting exposure to 129,218 Bitcoin for free. Why is that? Does the market expect MicroStrategy to become forced sellers of Bitcoin? Does the market expect MicroStrategy to go bankrupt? Or is the MicroStrategy stock just mispriced, presenting an opportunity? And so here was my little chart down here. Recent price 187, 11.3 million total shares. Total value was 2.1 billion at the time. Bitcoin trading at 29,000 at that moment. 129,218 held by MicroStrategy, worth 3.75 billion. Look at that. The shares are trading 1.65 billion below just the value of the Bitcoin. So clearly the market was irrational or expecting bad things to happen. So when I gave this talk in May 24, 2022, I think that at least a few people in the room now were there. Brian, are you still holding your shares from that meeting the next day? So hell yeah, man. So let's see how good Brian did. I actually got in, but I got out. I said, ooh, I'm taking profits. I wasn't smart enough to hold it the whole damn way through. I'm back in again, but I wish I'd held it every minute of the way. So here we go. What if you bought MSTR at $20 the next day on May 25th, 2022? Many attendees of the Atlanta BitPlebs meeting did. Well, it closed at 356.59 on Tuesday. My slides I was already working on then. It's already higher than that. If you bought and held, your cumulative return was 1,683%, which is what we call in the industry not bad. In other words, $1,000 invested in May 2022 turned into $17,829 in a little over 2 years. So that's pretty cool if you were able to hold it the whole time. Now the question is, what are we doing today? Is this thing, has it already run? Is it time to get bearish? Do you still want to hold this thing? Is what they're doing sustainable? So that's what we're going to talk about tonight. This was just a fun setup. But we'll also benchmark MicroStrategy performance over the past 4 years, and wow, that graph is really hard to read. Sorry about that. It didn't look that bad on my screen, but somehow it's really impossible to read in the way that this is being projected here. So let me tell you what we have here. We have a red line, which you can barely see, which is MicroStrategy, and it's the one at the very, very tippy top when you get to go all the way to the right. We have NVDA, which is supposed to be in green, but God knows why I can't see it there. We have the S&P 500, which is in kind of cyan blue, and we have Bitcoin, which is in orange. So anyway, MicroStrategy has outperformed Bitcoin by 1,221% over this 4-year period. The S&P by 1,591%. Every stock in the S&P 500, including top performer NVIDIA, by 683%. So there you go. Jordan. Yeah, so it's hard to see, but the one along the bottom here, this is just the S&P 500 index, so it looks kind of flat. This guy here, which is yellow, but it's supposed to be more orange, this is Bitcoin. Yeah, that's actually Bitcoin. NVIDIA is the one that's almost as high as, so the red right here is MicroStrategy, and then this kind of what looks like a yellow lightning bolt for whatever reason is NVIDIA. I don't know why the colors are all fucked up here, so sorry about that. Yeah, it's weird. I'm not sure what's going on with that. But in terms of order, you can see like the one that MicroStrategy beat by the least is NVIDIA. So that's sort of the one that's just slightly below the red line, and then below that is Bitcoin, which we only beat by
1,221%, and then all the way down at the bottom, the S&P, which we beat by 1591. So there you go. All right. So we talked about what kind of business MicroStrategy has been. What kind of business is MicroStrategy becoming? Are they really just a boring software company, and yet they're beating every stock in the S&P, or are they something else now? So here we go. And by the way, there's a few slides in here that I've stolen from my favorite, one of my favorite sources online, which is Invest Answers channel. If you don't follow Invest Answers, you should. They've made me a lot of money, so I get a lot of good ideas from there. And I'm going to steal a little bit of his content because I was too busy looking at my phone today and watching the Bitcoin price to make all these slides myself. So Michael Saylor, this was from the most recent MicroStrategy earnings call. He had some good quotes. So he said, Bitcoin, this is the most valuable asset in the world. The end game is to be the leading Bitcoin bank or merchant bank. You could call it a Bitcoin finance company, Saylor said. If we end up with 20 billion of converts, 20 billion of preferred stock, 10 billion of debt, and say 50 billion of some kind of debt instrument and structures instrument, we'll have 100 to 150 billion of Bitcoin. The company trades at a 50% premium with more volatility and ARR. We can build a company that has 100% premium to 150 billion worth of Bitcoin and build a 300 to 400 billion dollar company with the biggest options market, the biggest equity market, he continued. And then we basically start to chew into the fixed income markets, and we just keep buying more Bitcoin. Bitcoin is going to millions of coin, and then we create a $1 trillion company. So this is kind of his vision for where MicroStrategy is going. So he views them as really becoming a Bitcoin bank or finance company, not just a software company. All right. So I had asked another gentleman who has been consistently shorting MicroStrategy and is in multiple chats with me, and we spar all the time, to come out and present the bear case. And amazingly, he didn't show. I'm not sure why. It might be that he's running scared, that he's crying, that he's licking his wounds. He claims to have a sinus infection. I don't know. So I've got to present the bear case. This is going to be a really poor attempt to present the bear case, but here it is. So how could this all go horribly wrong? Well, MicroStrategy is a leveraged bet on Bitcoin. If Bitcoin falls hard, MicroStrategy will fall harder. I think that's for sure. MicroStrategy continues to take on debt to buy Bitcoin. If they're ever unable to make the payments on their debt, this could trigger a forced Bitcoin sale or even a bankruptcy. Back in the dot-com era, Michael Saylor was charged with accounting irregularities and fraud by the Securities and Exchange Commission. MicroStrategy paid a large fine and MSTR crashed. Could something similar happen again? Maybe he's just a bad guy, right? Maybe he's a crook or a fraud and bad things are going to happen. This is the bear case. There's a little more here. Yeah, go right ahead.
Prop up the bear case a little bit.
Please. Johnny, go for it. What do you got?
So you're missing the entire regulatory attack vector here.
Yep.
So
please share.
Any time the three-letter agencies could decide that Michael Saylor is running an illegal security and he's not running a software company. If he does, this whole thing is going to get shut down. And everyone knows from the Bitcoin community, not your keys, not your Bitcoin. Investing in this is to do it without security of being able to control your own wealth.
Absolutely.
So the main con to this is that Michael Saylor is at risk of running an unauthorized security.
I think that's fair. I mean, what he's doing, he has literally been dunking on every single company on Wall Street nonstop now for years. I asked the question, in the chat that we're in all the time, how long is the rest of the Wall Street going to let him keep dunking on them? Well, they're either going to try to compete with him at his own game, in which case they're going to lose because he's too far ahead, or they're going to try some regulatory attack vector like John's suggesting here. And the question is, what will happen? Will he be able to overcome that or not? So questions here. Rich first.
Does anyone know, or can you tell me about what the regulators were that happened in 2000? Like what?
I don't know the details, but I mean, basically, there was a lot of accounting irregularities back in the era. People were booking profits on like expected things that they thought were going to make them money, and then of course, when the dot-com era came to an end and crashed, a lot of those accounting entries were, suddenly having huge losses, and a lot of investors were mad, and they came out and said, hey,
It was fraud. It was a case of fraud.
Yeah, I mean, he was accused of fraud by the SEC. He did not admit to fraud. He paid a fine, admitting no wrongdoing, and that's why he's still running the company. If he was, if he was a convicted fraudster, he would be in jail, or at least not be allowed to run a public company.
During this time when this company went public, a lot of companies were going public. No one knows how to account on the SEC
Correct.
side, so they're just maintaining accounting records and then coming back to clean things up. And
Yeah.
I would,
So you can take a more charitable view. You can take a more negative view. You had a question, sir.
If the 390 agencies did come after him, right now MicroStrategy trades at a premium to the underlying Bitcoin. So it will basically drop down to the price of the underlying.
We're going to talk a lot about that premium and what it should trade at. So we're going to get to that, I promise. So
But
let's,
I mean, it won't go to zero necessarily because there is an underlying asset that can be distributed at a bank.
for sure, that any business, if they got shut down, would still have the value of like their physical facilities, their equipment, and in this case, their the assets on the balance sheet, right? Yeah. So as long as Bitcoin itself didn't get somehow knocked way down, then that shouldn't. So you would certainly lose that premium. And so we're going to talk a little bit later about whether MicroStrategy is a ghetto Bitcoin ETF or something else. So that's kind of what I call it.
Also, what's the chance of the regulatory agency changing tax to be more favorable?
Well, so we do have a new administration coming in. I don't know for sure whether Saylor and the Trump camp are friendly or not. I haven't heard anything specific about that. But you would think in general that the industry is going to be less scrutinized and attacked under the Trump administration. So.
Well, play out the scenario where the SEC delists MSTR.
I mean, sure.
Then you can't trade it. The next time it'll be tradable is when they sort it out, and then all of your advantage over Bitcoin is gone.
And believe me, when I get to my final slide of this deck, we're going to talk about why you should not put all of your Bitcoin into MicroStrategy. I don't do that. I don't recommend anyone do that. But yeah, so I mean, I'm with you. Not your keys, not your coins. You can maybe put a little bit if you've already got plenty of Bitcoin. Maybe you want to hold a little bit of MicroStrategy. That's kind of my attitude. So, but anyway, yeah, exactly. Anybody feel like they got enough today? Maybe not. So. Is MicroStrategy what? Oh, who holds it? I don't know that we know who custodies their Bitcoin. I don't. Yeah, Saylor hasn't stated. He probably doesn't want to tell you, how to go after his stack. So. Yeah. Fidelity. All right. There's another little slide here on the bear case. So we'll just. Saylor comes out and says, "Please short my stock. You're welcome to short MicroStrategy. We've built this security to be ideal for shorting. If what you want is to take a short position against Bitcoin, you can really go to town on our stock." So, and at the moment, there's you can the whole option set of chains exists on MicroStrategy. They don't yet exist on the Bitcoin ETF. So, if you're looking to take crazy leveraged bets up or down on Bitcoin, currently MicroStrategy is one of your better choices to do that. So he says, MicroStrategy's significant Bitcoin holdings create a direct correlation between its market value and Bitcoin's price fluctuations, making it an attractive shorting target for bearish investors. The CEO's unwavering commitment to holding Bitcoin, even during market downturns, instills confidence among short sellers that the company will not divest. So basically, if they want to be sure they're shorting, Bitcoin hard with leverage, if Saylor will never sell, then they're going to get that exposure. If he was going to suddenly hedge and switch strategies, then it wouldn't be a good pure play for that. MicroStrategy's unique securitization model enhances its risk profile, allowing for high volatility that can amplify returns for short positions. So these are advantages of shorting. Now, risks of shorting. Well, the inherent volatility of Bitcoin poses risks. A sudden price increase in Bitcoin, like we saw over the last several days, can lead to significant losses for short sellers as MicroStrategy's stock may surge. Market sentiments and investor behavior toward Bitcoin can shift rapidly, impacting MicroStrategy's stock in unpredictable ways. When you look at MicroStrategy, you know that it really follows two factors pretty carefully if you watch it. It follows the Bitcoin price to a large extent. It also follows the NASDAQ just as like a tech stock. And so you kind of overlay those two things, and that tends, like on a given day, if Bitcoin's up, MicroStrategy may be down a little bit if Bitcoin's up a little bit, or it could be not up enough, and you're like, well, why not? And then you'll go look and say, oh, look, the whole NASDAQ's down. That's why MicroStrategy is down on the day that Bitcoin's up. Things like that can happen. The other thing is, I think today, Saylor may have been doing another Bitcoin purchase because we're going to talk about dilution. I think he may have, if you looked at the market today, MicroStrategy was down more than you'd expect. So one reason why is he may have been deploying a bunch of his stock to buy some more Bitcoin. We won't know until about a week later. We'll find out. But anyway, shorting MicroStrategy exposes investors to unlimited loss potential, as the stock price could theoretically rise indefinitely if Bitcoin's value increases. So I would, just to be clear, I would never suggest that you short MicroStrategy or Bitcoin. I think that's insane, but I do know people who do it, and that's the bear case. So that's about all I've got, but thank you guys for helping out with the bear case. I'm not good at that.
One good strategy a lot of people like to use is long Bitcoin short MicroStrategy, because MicroStrategy appears to be overvalued compared to Bitcoin.
Correct.
However, using that strategy, they've lost a lot.
That's right. And we're going to talk about why exactly, Ben. I've got that one coming up. So
If you do want to short, there's a 2x inverse leverage.
okay, hold on. Now we got to talk about leveraged inverse ETFs. So my suggestion to anybody in the room who wants to listen to me, do not buy leveraged or short or inverse ETFs. If you really, really feel the need to take a position like that, best bet is, go buy a put option, if you really want to take a negative position, because then you can't lose any more than the value of the put option you bought. These ETFs that are leveraged and short and inverse, they basically trend toward losses over time. They only make sense to hold for very short periods of time. If you hold one of these levered or short ETFs over a long period of time, you'll almost always lose. That's the way that they're structurally set up.
It's the carry cost, so it doesn't have to be that long.
Yeah, I mean, I'd say you want to hold it for under 30 days, probably under 5 days, and better yet, never. That's my recommendation.
Would that have an advantage over an unleveraged inverse ETF?
There's just not a lot of unlevered.
Yeah, and then they have fees, right? And a lot of times, even the inverse ones, I think sometimes have some. The fees are one thing, but yeah, the big one is if they try to go 2x or 3x, you definitely suffer from the volatility there more than you should. There's a whole, rabbit hole you can go down as to why, but it's because math, basically. So, all right. So now we're going to do a little Corporate Finance 101 for those of you who are wondering all this stuff we're talking about shares and dilution. We're going to go through this stuff quick, but we're going to cover the basics so that you'll be up to speed on when we go through how the infinite money glitch works. You'll understand all the terminology. So here we go. We're going to start with what exactly is a stock, also called an equity. So think of it like buying a house. So we're going to buy a house for $300,000 here. We're going to take out a loan from the bank for $225,000, and we're going to make a $75,000 down payment that we saved up. That $75,000 down payment is the initial value of your equity. So you own the house. The bank you owe the bank $225,000. You own the house, and the house is worth $300,000. So you have $75,000 in equity in the house. Then what happens if your home price goes up by 10%? So now your house is a $330,000 house. You still owe the bank $225,000 because this happened like the next day. And the equity, if you do some subtraction, is now $105,000. So when the house price went up 10%, your equity went up 40%. That's pretty cool. This is the benefit of leverage, and this works, in the real estate market, as Gina or others here can tell you. This has been the way people make money in the real estate market forever. Is you can basically keep all of the gains on your house because the bank doesn't get any more than you owe them, and you get the rest. So how is this relevant to businesses and stocks? Well, what exactly is a stock? Also called an equity. Now, instead of a house, the asset is a business. The equity of the business is the same concept. It's called the market capitalization of the stock. So this company has a bunch of debt. They owe some banks, the $225,000 or whatever they owe them banks. But the business has a certain value. The difference between what the overall value of the business is and how much money they owe is the value of the equity. It's just like the house concept. So the difference here is you subdivide the equity into shares. So back here, you just you own the whole house. The whole 75 came out of your pocket, and you now have the whole 105. Now instead, pretend like you sold a bunch of shares to people everywhere, and now you jointly own the equity on the house together, except it's a business, not a house. So here we go. You subdivide the value of the equity in shares. These are individual stock shares. Note that this means any stock of a business with debt outstanding is already leveraged. So when you guys want to think about buying, levered ETFs and then options on levered, a stock is already a leveraged position. Keep that in mind. So as long as the company has debt outstanding. So buying a stock with leverage is already really leverage squared. So FYI, it doesn't mean it won't work out for you. It just means Once you get a whole lot of leverage going on top of something, it has to go your way or you're going to lose. All right. What is stock dilution? So we talked about this a couple times. So suppose we have a company, the total market capitalization of your company's equity is 100 million. Once again, that's the difference between all the assets of the company and their debt. That's worth 100 million. And let's suppose there's 1 million shares outstanding. Well, then the price of each share of your stock is $100. And so anybody who's buying and selling your stock, they're trading at $100 right now. What if you issue an additional 100,000 shares of stock and nothing else about your business changes? Well, you now suddenly have 1.1 million shares outstanding, and your business is still worth 100 million. So simple math, 100 million divided by 1.1 million shares, your business is now worth $90.91. This is dilution. It's considered generally a bad thing for investors. If you've got a company that likes to dilute their share count by just printing more shares, it's very comparable to money printing, with the dollar and other things. Nani, what do you got?
Is there a difference between splitting and dilution?
Yeah, so splitting, basically when you split your shares, you say, we're going to go 2 for 1. Well, then you're not surprised that your stock that was at 100 is now worth 50 because you got 2 shares for every 1 share. You didn't lose. Dilution is where the company just says, we're going to on the sly, or I guess they can't do it on the sly, but we're going to go ahead and just sell a bunch of shares, and it's just like the government printing money and your dollar not being able to buy as much. That's how dilution works. Yeah, so this
you get nothing in the dilution case.
Correct.
Your bottom number goes up, but it's in your hand.
Yeah, now it depends on what the company did with the money. Like maybe they did something useful and maybe that puts this, but let's suppose they just, spent it all on executive bonuses, right? They diluted by paying their executives a bunch of shares of stock, and the same guys still work there, and suddenly now the stock's diluted and you lost, $9.09 worth of value on your equity because of the dilution. So this is what dilution is. And what I was talking about today is a lot of these Bitcoin companies, they do dilute their shares quite a bit. So CleanSpark, the miner, they will dilute their shares to go out and buy like more mining rigs and buy more mining facilities and things like that. And in the end, maybe that's okay because it gives them more hash rate and maybe they can generate more Bitcoin. But in the short term, you'll see the stock take a hit. And we've seen that quite a few times with the miners in this bull run. MicroStrategy does the same thing. They dilute their stock and go buy Bitcoin. Yep.
Is there a tendency for earlier, newer companies to dilute early on versus older, more established companies? Like, is there a pattern there?
I don't know that there's a necessary pattern, more by industry and more by management team. Like most investors do not like dilution in general, and if you're diluting them, they're going to get mad and they're going to probably sell your stock. But if you can prove that what you're doing with the money that you're raising by diluting their shares adds enough value, then they may not be upset. So that's the trick.
Most large public companies dilute a little bit all
Yeah,
the time. Like
because they pay their employees in stock and things like that, and that dilutes. So it's normal.
And splitting is it just makes it easier for people to buy a small amount of company, right? So
Yeah, splitting is not dilutive.
there's no fractional shares in the traditional stock market. So
Are you confident that CleanSpark is issuing new shares?
Yeah, I mean they actually had a vote where the shareholders got to vote to say, are you okay with them, issuing a bunch of new shares to buy mining rigs and stuff? And the vote came through as a yes, and so that's why they're doing it. Stephen?
It's like Marathon, for example,
Yeah, go ahead. I'm sorry. Go ahead.
hasn't sold any Bitcoin in 8 months.
But I mean, Marathon may need. I don't know if Marathon dilutes shares or not. I don't follow them quite as closely at the moment because I'm.
I can tell you.
Yeah.
So, Marathon has not sold any Bitcoin in 8 months, and they also have not issued any new shares, which means the question like, well, how do you pay the bills to get Bitcoin money?
Yeah.
So they sell shares from Treasury.
Well, selling shares from Treasury is dilutive. That's what we're talking about.
No.
no, the shares already exist.
That's part of the flow, right?
I mean, I guess if they're already known to exist, then yeah, I guess when the company holds the shares internal to the company, it's kind of like the shares don't exist. But I guess there's a question of which box you've got it in there. So maybe you're right. Maybe these are known to be shares that Mara holds, and so it's not considered dilutive because it's already priced in, right?
I would ask the same question about CleanSpark, because I don't think these companies are issuing new shares. I think they're selling shares.
Well, so I know for sure on CleanSpark because I like literally got to vote.
Issuance.
Yeah, I mean, like there was a shareholder vote, and the shareholders, I actually voted no. I don't want them to dilute, but yes passed, and so they're definitely diluting the shareholders.
That's an important point. It's like, it's
Yeah.
It's bad.
And I'm not an expert on this, so I might have the details slightly wrong.
But selling shares from Treasury,
And there's some difference there, which is a subtlety that's a little beyond me, Ed. So, but yeah, thanks for that, Stephen. Yeah. So shares outstanding basically means, go back to the picture of the house, right? So, we know you've got $105,000 worth of equity. Now, let's suppose you go to all your buddies and you find 100 buddies and you say, every one of you is going to own the house equally with me. And so you basically just issue them all a piece of paper that says, you each own one share of the house. And then that would be the shares outstanding. And then if you said, I'm going to find 100 more buddies and issue them the same piece of paper, well, suddenly your first 100 buddies are going to be like, whoa, we just, got diluted by half because we didn't know you were going to do that. So that's kind of what shares outstanding just means. However many times you've said to somebody, you have an equal share of this, or maybe you have 10 shares or 20 shares.
It's synonymous with exists.
Yeah. So it's synonymous with exists.
Can a share become not outstanding?
Well, so this is kind of the point Ed was making, and there's a subtlety there where like the company could hold the shares in their treasury, or they could retire them and say they don't exist. And so I think that's when companies do share buybacks, which we're actually going to talk about right next. So next is share buybacks. So this is sort of the opposite of dilution. The company takes excess cash and purchases its own stock on the open market. Then these repurchased shares are effectively retired. So that's what I mean. It's an outstanding share. If it's trading, it's part of the float. There's this idea of shares that are part of the float and shares that are not. There's this idea of fully diluted, which might be like the shares that are tightly held by the treasury, are not part of the float because they're not trading, but the company, maybe Marathon or whoever, could sell them from treasury, or they could completely issue brand new shares. So there's some subtlety there, which I'm not going to try to explain because I don't understand it fully myself. But the basic idea is, there are shares that are available for sale that are trading, and then there are shares that can be bought back and then retired, basically. So sort of like they're destroyed, and that's sort of like.
It's the same concept as burning Bitcoin.
Yeah, if you basically take your Bitcoin private keys to the grave, then you've done a share buyback for all other Bitcoiners, right? Because no one's ever going to get that Bitcoin again. So like Satoshi did for all of us, presumably, right? So. Right. Companies that are doing share buybacks aggressively, and we're going to talk about Apple, who's a company that does that that's their main strategy. They're basically trying to reduce the share count. So that's probably where they retire the shares after they buy them back, because that's the way that they're trying to create values, trying to create scarcity.
So they're not getting the dividend anymore?
So once the shares are retired, I would say, yeah, they don't have to pay a dividend to those shares.
But if they're just bought back, I would think that like Apple, with the example you gave, Apple's taking the dividend from their buybacks.
I don't know if they're paying themselves a dividend for their treasury shares, or if they're just retiring those shares and saying the dividend gets spread under, because the idea is you want the shareholders to see appreciation, and so it's like you by Apple retiring those shares, then the dividend can get spread over fewer shares, and there'll be more scarcity for Apple shares, and that's basically the whole thing that's been driving Apple stock for the last decade or more. So.
Yes, when they do this buyback, they want basically fiddle with the PE ratio, so they have to actually get rid of those shares.
Yeah. So that's when I say they retire them or whatever. So if our hypothetical company, the one from the prior slide, does a share buyback for 100,000 shares, in theory it should bring the share count back down to 1 million if they retire the shares, and then should bring the stock price back to 100. So this is the idea that dilution and share buybacks are kind of two sides of the same coin, or opposite of each other.
Talk about the reason that it was illegal before 82 is because it's a backdoor way to leverage people that didn't intend to be leveraged. So if a company borrows money in order to buy back their shares, you're being leveraged as a shareholder against your will. Right? So,
but the law's changed and it's now legal and it's very common, right?
Insidious, and
yeah.
It's eventually going to blow up in our face like mortgage-backed securities.
John has got a lot of bear cases. All right.
It's got to be one of us.
Yeah. All right, so this is your Corporate Finance 101 lesson. Let's see. Oh, no, we got one more. What is a corporate bond? We got two more. Corporate bonds are loans made to a company by investors. So basically, you don't have to buy stock in these companies. they'll sell bonds too. And what happens is if they're selling you a bond, you're loaning that company money, and they don't owe you the upside in the business. What they instead owe you is exactly what they promised, which is, this much interest per month, and then after a certain amount of time, you get your money back. So it's just like any other loan. Corporate bonds require the company to make regular interest payments to investors. Eventually the loan term ends and the company must pay back the balance of the loan, just like you would if you bought a house or something. Often a company will refinance the loan by issuing a new corporate bond to pay off the old one once it's getting close to reaching maturity. So this is just your basic idea of debt financing. It's the same thing as the house example. The last thing we need to talk about is what is a convertible bond, because MicroStrategy makes heavy use of these. Convertible bonds are corporate bonds with the feature that allows investors to convert their bond holdings to shares of stock at a predetermined price. This causes dilution. Investors benefit from the interest payments, but also gain the upside of equity if the stock performs well enough. Investors have downside protection since they will eventually get their initial investment back when the bond matures, assuming it doesn't do so well, the stock doesn't do so well that they want to convert it. Instead, they'll just get their capital back plus the interest along the way. So convertible bonds offer the upside of stock conversion. What it does is it allows the company to issue these bonds at a very low interest rate. Why? Well, because investors I don't need as much interest from you because I've got this upside scenario that if your stock performs well, I'm going to get this huge windfall by being able to convert to stock. So I'm not going to demand that much interest. So what MicroStrategy does is they pay less than 1% interest on these converts, which makes it easy for them to service the debt. The downside is in a few years, as the MicroStrategy stock moons, the bonds convert to stock, the stock gets diluted. But guess what? The MicroStrategy stock mooned, so investors don't get too upset because they're doing well.
So just a quick question on that. When MicroStrategy has to pay their bond, are they issuing new stock or stock that they are currently holding?
Well, when they're just paying the interest on their bonds, they're in theory paying it by the software they sell and just their ongoing business. When they need to pay off a bond entirely, then they would probably either refinance the bond, just basically issue a new bond, pay off the old bond. Yeah, but they've been doing this whole Bitcoin strategy now for a fairly short period of time. All the converts, I think, have been in the money to convert to stock. So basically, everybody who bought converts has converted to equity, or has at least gotten the value of that. They've also got some regular bonds too, and those they just have to make interest payments on and eventually pay off. So.
But are they issuing new stock, or are they just buying stock off the market and giving it to people? Like when that option strikes, and people say, "Yeah, all right, good, I want to." No,
when they have to take a convertible bond and convert it to equity, they're not going out and buying that equity. They're basically saying, they're basically converting the bond to equity, which does dilute the equity holders.
Yeah, I haven't seen the number of outstanding shares increase. Is my question.
You'll have to go back and double check the homework, but I think this is my understanding of the way it works.
Increasing over time.
Yeah, I mean, MicroStrategy is definitely diluting. This is their strategy.
No, it's been going up.
Yeah.
I haven't looked at it in the last couple of days, but a year ago it was going up steadily.
It usually takes several years for a convert to switch to equity, and only in the case that the stock runs up a lot. So you're not going to see it all the time.
At the strike, they're not doing it when they issue the convertible bond.
Right. So that's the key point is, at the moment they issue the convert, the shareholders are not immediately diluted, and they are putting out debt that they can easily service because it's at a very cheap interest rate. Yeah, and then the dilution only happens in the case where the stock does so great that nobody's upset. And so that's kind of the reason why the converts have worked really well for them. We're going to talk more about this as we get into the money glitch itself. I just wanted to kind of lay the groundwork for the convertibles. So that's really your Corporate Finance 101 lesson, so for those of you who needed it. Now we're going to get into the infinite money glitch, what MicroStrategy is actually doing with all these tools. So here we go. What is MicroStrategy's Bitcoin strategy? Well, they adopted a strategy of buying and holding Bitcoin. They will never sell. Saylor's come right out and said, we will never sell. So you can say I don't believe him, actually they did sell a little bit at one point, I think for some sort of tax reason or something, but in general they have never sold any meaningful amount of Bitcoin, and they never will. They believe that Bitcoin will outperform traditional assets such as the S&P 500. This strategy reflects a significant shift in corporate treasury management. MicroStrategy aims to leverage its potential for substantial appreciation over time, setting a precedent for other companies, aka first mover advantage. Once again, this slide was respectfully stolen from Invest Answers, and a few of these are the same. Issuing bonds to fund Bitcoin purchases, so capital raising through bonds. MicroStrategy raises capital by issuing convertible bonds, allowing them to gather funds for Bitcoin purchases without immediate equity dilution. Advantages of convertible bonds we just talked about. They provide flexibility for investors, offering the potential to convert into equity while giving MicroStrategy access to capital at lower interest rates. Minimizing shareholder dilution. This strategy enables MicroStrategy to acquire Bitcoin while preserving existing shareholder equity, aligning interests between bondholders and shareholders. Once again, the dilution only happens in the case where the shareholders have already made bank. Okay, benefits of the bond issuance strategy. Issuing bonds allows MicroStrategy to raise substantial capital quickly for Bitcoin purchases without immediate equity dilution. Bondholders benefit from fixed interest payments and the potential upside of Bitcoin value appreciation through share conversion. This strategy provides MicroStrategy with financial flexibility and enabling them to react to market opportunities without sacrificing equity ownership. So they basically can time when they want to do things. By leveraging the bonds, both bondholders and shareholders can potentially see enhanced returns as Bitcoin's value increases over time. All right, permanent capital strategy. Advantages of permanent capital in Bitcoin. Provides a stable financial foundation for long-term investments, ensures liquidity for future acquisitions, reduces the risk of capital calls. So they have this giant pool of Bitcoin assets, and as long as their debt compared to that is small, then they're in pretty good shape.
Point number 2 says that they could sell it.
I'm sorry, say again?
Bullet point number 2 says that they could sell the Bitcoin to acquire another company.
They could, but they also could just say, we are going to hold the Bitcoin and borrow against it. They don't have to sell the Bitcoin, right?
So is Michael Saylor able to do this because he has the majority of the voting rights?
Yeah, he owns more than half of all shares. I think some of the dilution that's going on may take him slightly below half, but he's still, he basically has all of his buddies, with lots of shares, so he's got the controlling interest. And so basically he can set the strategy, and he's effectively the sovereign of MicroStrategy. While there's a board of directors and a CEO and a bunch of other people, he basically makes all the calls.
There are no two classes of shares.
No, he just has literally most of the shares.
He's no longer in control as of today.
So he diluted himself enough today to go below 50%. But once again, he's got enough buddies and others that he'll still get what he wants. So he wouldn't have done that if he didn't think he was still going to be in control. He just needs to have one or two other people help him out. So.
Is there anything that limits his time to do these things? Like, he can raise the bond, he can announce the bond issuance. He has to kind of wait for the bonds to be purchased before he can move forward.
We're going to talk about the execution of that real soon. Let's just I'll get through the slides and then we'll see. If I don't already answer it, then we'll come back to it. All right, so the other side, supporting long-term debt instruments, permits the issuance of bonds backed by Bitcoin, enhances investor confidence in MicroStrategy's financial stability, facilitates strategic growth without constraints. So here we go. This is the infinite money glitch. This is my slide. So MicroStrategy, it doesn't matter where you start on the wheel, but we'll start at the upper right. Borrow dollars at low interest rates. Convert dollars to Bitcoin. Bitcoin price appreciates. MicroStrategy price goes up. Company financial position improves, allowing it to borrow more dollars. Back to borrow dollars at low interest rates. This is the infinite money glitch. He goes around and round and round the circle, and each time he does this, he's basically just forcing not only the price of MicroStrategy higher, but now that his buys have gotten to be so big, he's effectively forcing the price of Bitcoin higher. So it's almost a infinite money glitch. So there you go.
I mean, technically, in the second last step, when the company financial position improves, there's also a dilution step to this. So it's not entirely infinite.
Well, if we're talking about converts and the converts are cashed in for shares, there is a dilution. And we're going to talk about why that dilution is accretive and not truly dilutive in a minute. We're going to get to that. Peter Schiff was nice enough to explain MicroStrategy's infinite money glyph to us. So he says, MicroStrategy borrows money and issues shares to buy more Bitcoin. As a result, the price of Bitcoin goes up, which causes the price of MicroStrategy to increase, allowing it to borrow more money and sell more shares to buy even more Bitcoin. Wash, rinse, repeat. What could possibly go wrong? Now, you may know Schiff is a Bitcoin bear, and so he's clearly being sarcastic here. So back to the bear case, what could possibly go wrong? Well, we talked about some of them. Maybe there's some other bad scenarios too.
The price of Bitcoin could go down.
Yeah, I mean, clearly that's one of the obvious ones. All right, so we did the bear case, we did the infinite money glitch, now here's the bull case. So once again, I'm stealing slides from Invest Answers. Generating BTC yield. This is what MicroStrategy refers to it as. So MicroStrategy focuses on increasing Bitcoin holdings through strategic investments and operational efficiencies, enhancing overall value. The company employs various financial instruments such as options and futures to generate additional Bitcoin yield without selling existing assets. By leveraging Bitcoin's appreciation and reinvesting returns, MicroStrategy aims to grow its treasury reserves while maintaining shareholder value. I prefer to think of Bitcoin yield as increasing sats per share. So going back to my little wheel that demonstrates the infinite money glitch, each cycle around the wheel below has the effect of increasing sats per share of stock. This is why, even though it's dilution, it's accretive to investors, because what the investors care about is the number of MicroStrategy shares I hold are now representative of more Bitcoin than they were before we went around the wheel. And every time around the wheel, what he's doing is over there on the far right, the sats per share of stock. Even though the number of shares outstanding is becoming more, he's doing it in such a way that the amount of Bitcoin he buys represents more sats per share. And the way you can think about this is, if MicroStrategy is trading at a premium to the Bitcoin they hold, like 50 to 100%, he can sell MicroStrategy to buy Bitcoin. And when he does that, he's getting more Bitcoin back than what's represented by the MicroStrategy shares he has to sell to get it. So that's why it basically, as long as MicroStrategy is trading above the value of its Bitcoin holdings, it makes sense for him to sell new MicroStrategy shares into the market, diluting all of us to buy Bitcoin, which means actually, even though there's printed more shares, we all have more Bitcoin per share than we had before, so we're happy. And the fact is the shares go up as Bitcoin goes up. Right?
So is it more sats per share, or is it more dollars of Bitcoin per share?
It's more.
It's not more sats per share because you're diluting the stock. Yeah,
it's more sats per share because he won't do the he won't do the trade unless it's accretive in that term. And if you look, that's what he's been doing. So it's.
So if he gets caught in a 50% swing down, he's going to have to sell shares. You realize that, right?
Well, so that's one of the bear points.
As good as a promise is.
Well, so he did get caught in a 80% swing down in the 2022 bear market, and he did not sell during that time. Now, maybe in the future it'll go horribly wrong, like I had a slide about. He's definitely taking a more aggressive stance. We're going to talk about that in a minute. I think there was a question here.
Is there a way to model that, like historics, and model that out into the future of like rough projections of what that sats per share could be? Is he putting that information out? Is that something that we could look at?
Yeah. So I've stolen a lot of slides from Invest Answers. Invest Answers is a YouTube channel. He's got a video called The Infinite Money Glitch. Watch his whole video. He does some modeling in there. I didn't include all that. He has some projections about where he think it might head. He's got some wild numbers about what his future price targets out X number of years for MicroStrategy are, and the amount of Bitcoin that they could acquire using this strategy. So, but it's somewhat speculative, but you can certainly look at the history and see, yeah.
This earnings call from a few weeks ago, they had a PowerPoint deck.
Right, and Saylor on the earnings call had a nice presentation there as well. Anybody else? Right here.
So for all of this to work well, no single market participant should get anywhere close to having a monopoly of all the Bitcoins. So there's only 21 million or 20 million. If something like this keeps going on and one market participant collects whole pile, then Bitcoin sort of becomes worthless. Right? The whole point is for it to be spread out and be actually usable.
This is a potential concern. I've definitely heard that one. MicroStrategy owns maybe 1% of all Bitcoin now, so you can decide whether that's too much or not. But he's got an extremely aggressive plan, which we're going to get to, and that gets a little closer to your concern in my mind. So,
is there anything when it comes to creating the convertible bond issuance? Is there anything regulatorily that he has to comply with that an outside regulatory force, government, can interfere with?
I mean, I think. He's got he's I think the longest serving public CEO of like anybody, something like that. I mean, he's been at this since he was a kid, basically. So he knows exactly how to go about doing all these actions around issuing shares, issuing bonds. He doesn't screw up. He does it extremely, he puts all the information out there. He discloses everything. So he's trying very, very hard.
His public keys?
He's not, no, I don't think he's done that. But my point is, I'm talking about the corporate world. You're talking about the Bitcoin world.
The value of the company is based on the public keys being valid.
Fair enough. If you think he doesn't have the Bitcoin, yeah. I'm talking, that's not a, we're talking about government rules, you're talking about Bitcoin rules, and I agree with both. So.
The question kind of more like, if they don't like what someone's doing, they'll change the rules.
For sure. And I mean, he's clearly basically saying, these are the rules you made, and I'm going to beat you over the head with them over and over again and show you why there's a gigantic loophole here that I am exploiting. So yeah, maybe maybe there will be a change to the rules to say, okay, you can't keep doing this.
But to his point, if you go from 1% to 2% to 3%, we're in the end, and eventually you're going to attract people who decrease the power of that space. It goes against the process.
Yeah, I mean, I think there's concerns about that. Let's get to the part where he's going to try to take down basically all the Bitcoin. We're about to get there, so here we go. And this is it right here. So they've recently announced this new capital plan. It is like the largest capital raise ever announced in the public markets for any company ever. He wants to raise $42 billion in total capital, $21 billion from selling shares, directly dilutive, $21 billion from selling fixed income, probably converts, which are eventually dilutive if the shares go up. They want to deploy $42 billion worth of capital in the years 2025 to 2027. And by the way, they've already been doing it. They did $2 billion a week or two ago, and they might have been doing it again today, it seems like. So they are already at this, and they're selling equity, they're maybe selling converts. If you do the math on this, and I don't know with the price touching 93 today, but where the prices have been, this would effectively buy MicroStrategy all the Bitcoin that will be mined over the next 3 years. It would basically just say, every Bitcoin that's mined over the next 3 years, or the equivalent of that, we're going to buy. And so there is no more issuance, like for 3 years. And then probably after 3 years, they want to do it again, right? So effectively, MicroStrategy is now saying, we're going to buy all the Bitcoin that's issued or mined. So if you want to buy some, you're going to have to get it from someone else. So what does that mean? Well, and here's one of the slides that does show what they're trying to do with Bitcoin yield. So they are looking to say each transaction is trying to increase the percentage of their Bitcoin that they're holding through these transactions. So you can see 2022, 1.8%, 7.3, 17.8. They're trying to generate an additional 6 to 10% Bitcoin with each year, in the future. And so you can consider it maybe on average 8% increase to their Bitcoin holdings is what they're attempting to accomplish with this capital plan.
May I ask a question?
Please.
I'm up here.
Okay, yep.
Why in 2024 is the Bitcoin yield so much greater?
Probably, why did it go from so much from the 7.3 up to the 17.8? I think he's just been very aggressively buying, especially during the, well, I don't know why specifically 2024. This is a slide.
First half of the year, Bitcoin price was quite low. And
yeah.
Is Bitcoin holdings in dollar terms or Sats terms? Do you know on the slide?
See, I thought Bitcoin yield, the way he talks about it, is when he's getting extra return on his Bitcoin by selling options and futures. So if you sell covered calls, for example, you generate a yield on your stock.
That's the way people typically think about yield. I think the way that he's talking about it is just trying to increase the Bitcoin held, but I could be wrong there. So if some of you have gone deeper on this than I have, then feel free to correct me. But the basic idea, is the same. Like he is doing all those things. All of them are attempting to generate profits, and he intends to put all the profits that he generates back into more Bitcoin. So depending on whether it's just simply, selling software and buying Bitcoin, or whether he's doing all these other financial engineerings and buying more Bitcoin. And that's what we're going to get to in a minute, is what is the core business of the company now? And maybe it is these activities, right? So, all right. So this is what we're talking about now, forward expectations. So let's use Apple as the example again. So approximately 98.5% of Apple's valuation, and this came from Saylor's talk in the recent shareholder earnings meeting. Basically, only 1.5% of Apple's value is tied to like their factories and their machinery and their office buildings and things like hard physical assets that Apple could sell. 98.5% of Apple's valuation is the business and the idea that they're going to keep selling more iPhones and that the business is going to keep growing. So if suddenly the music were to stop at Apple and they couldn't sell any more iPhones and they had to shut down Apple, Apple would only be worth a tiny fraction of what the stock's worth. So let's compare that to MicroStrategy. But actually, let's first talk about Apple's balance sheet strategy. So this is well, Apple is really no longer a very innovative company, at least in my opinion. Next year's iPhone is not much different from last year's iPhone. Business is not really growing anymore. Everybody in the world that wants an iPhone kind of has one. I mean, there's a few more people to buy iPhones, but it's pretty well penetrated. So how does Apple create value? Well, they mostly do it through share buybacks. So they look to reduce the shares outstanding and get rid of extra cash. So Apple generates tons and tons of cash from all these iPhones they sell. And what they do with it, their best idea is they sit on a mountain of cash and then they say, okay, well, we have so much cash that we're going to take some of it and buy back Apple shares. And so this has kind of been the corporate finance best practice for, I don't know, maybe 20 is the wrong number, but ever since they changed that rule to allow this, basically companies are like, yeah, we're just going to buy back our stock and that's how we're going to generate value. We don't need Steve Jobs to invent anything new and cool. We're just going to keep selling the same stupid iPhone to you people, and we're going to basically buy back our shares, and you're going to want to own our stock. And that's the Apple strategy now in the world it works now.
Did I just read that they do have some Bitcoin, or was that a fake article?
I don't think Apple has any Bitcoin, to my knowledge.
And when they buy back, that drives their share price up?
Yeah, it does, because they're basically making the shares scarcer, right? They're reducing the share count outstanding. So MicroStrategy, balance sheet strategy, is almost the exact opposite of Apple's. They're still a boring, low-growth core software business. They do almost the exact opposite. They dilute the shareholders by increasing the number of shares outstanding, exactly the opposite of what Apple's doing. They borrow, so Apple's like, we have too much cash. We need to get rid of cash. Let's go buy back shares. MicroStrategy says, we don't have enough cash. We want to get more. We're going to sell everything we can think of, stocks, bonds, you name it, to generate $42 billion worth of cash. So they borrow even more cash than their business generates. And they're continuously increasing the Bitcoin per share. That's what they're doing with that cash. So maybe this is the corporate finance best practice for the next 20 plus years. Maybe it's a bubble that will blow up. I don't know. But this is kind of how Apple and MicroStrategy are like opposite sides of this strategy. So
how's that not a Bitcoin grift, though? They're not adding any value. They're not providing the network. They're just profiting from it.
What is a Bitcoin
Well,
grift? Isn't that most people? It's like
because aren't we all Bitcoin grifters in that way? We're all sitting on Bitcoin and waiting for the price to go up.
But MicroStrategy's plan is that
speak for yourself. That's not why I'm in Bitcoin.
I'm not saying that's why I'm in. I'm saying if you hold Bitcoin, that's what you're doing, whether that's why you're in it or not, right?
Well, it comes down to whether it doesn't matter why you're in.
It comes down to whether or not you think loophole is a bad word. I mean, I got to work very closely with the CFO of Amazon. He never did a single illegal thing. He just took advantage of every possible loophole out there. So is a loophole a bad word? Normally when you ask the crowd, nobody raises their hand.
Yeah. I'm not gonna decide whether we,
What value does MicroStrategy offer to the Bitcoin community other than artificially raising the price? How's it artificial? Because they borrowed money to buy Bitcoin.
Okay.
In a hype cycle.
But they borrowed money at someone willing to lend them money. They're paying back at the rate that the person is willing to lend them money.
They won't be able to pay back if the price of Bitcoin.
I do believe they are funding some open source. I think they have a little bit of charitable arm. I think they are getting involved in Lightning and some other things. So they are becoming more of a Bitcoin development company. But otherwise, your point's fair.
They're going to get all their loans called.
All right, we're not going to decide. Yeah. We're not going to decide whether Michael Saylor is a good guy or a bad guy. We're just going to talk about what he's doing and what the shares are going to do. If you don't like him because you don't like him, you think it's a grift, that's fine. You're entitled to that opinion. I may not disagree with you, but we're just going to, he's playing by a set of rules that seem to be legal, and this is how it's currently functioning.
He's working outside of the rules, and he'll be held to account.
All right, we're gonna try to get this thing done. We got a little bit further to go, so we can have dinner conversation about that. So my suggestion is stop thinking of MicroStrategy as a ghetto Bitcoin ETF. Michael Saylor and MicroStrategy have demonstrated that adding value using Bitcoin financial engineering is their new core business. Like any other company, they should be valued on forward-looking strength of the business, meaning he's going to keep playing these games, he's going to keep creating value, and don't think of him as a ghetto ETF and say, what's the premium? And if the premium is above zero, then I want to short his stock. I think that's the wrong way to think about it. So valuing MicroStrategy based only on the liquidation value of their holdings is like valuing Apple based on the value of their office space, factories, and equipment, which they could fetch in a fire sale, in my opinion. Don't stress on the so-called MicroStrategy premium versus Bitcoin value, because he's demonstrated that he knows how to financial engineer more value, whether that adds to the goodness of society or not. All right.
Sorry, one question there.
Yeah.
What rate is he adding value at on the long term? Did you say 8% a year?
Well, that was sort of what they're trying to do the Bitcoin yield thing on, but the other way to look at the rate he's adding value is the share price appreciation, which is, of course, tremendous, right? So.
Right. No, the reason I was saying that is, let's say you're willing to pay for 3 years of earnings, so that's 24% premium. So that's why I was asking, what rate is it? Is he actually adding Bitcoin per share? He's
adding Bitcoin per share, and because he's a leveraged bet on Bitcoin, and because investors are feeling like he's found an infinite money glitch, his shares are appreciating much, much faster than Bitcoin, right? So, I mean.
But do you know what rate he's increasing the number of sats per share at?
Well, I think that was that 8 to 10% or 6 to 10% was the projection they were trying to do over the next 3 years. You probably can go back and just, everything else is public record, right? You could go through all of their statements and look at each time they bought Bitcoin, they disclosed it, how much money they spent, how much Bitcoin they now hold this much. I mean, he's got all the tweets you can go through. I didn't do that homework for this because it's a matter of public record and we know that it's worked. But yeah, and if I put all the numbers on one page, you'd be like, okay, cool, there it is. But I didn't do that, so there we go. All right. Accounting rules are changing. This is just worth mentioning. The accounting rules have been very unfriendly to things like Bitcoin. The indefinite intangible is like the worst accounting. We're going to get to be able to recognize Bitcoin as fair market accounting, and so fair value accounting, and that'll be more attractive to companies who hold Bitcoin on their balance sheet to be able to recognize when it goes up and not only when it goes down. So these are, again, from Saylor's recent shareholder deck. These are their principles. So number 1, buy and hold Bitcoin indefinitely, exclusively, securely. Number 2, prioritize MicroStrategy common stock, long-term value creation. Number 3, treat all investors with respect, consistency, and transparency, apart from sharing his public key address, I guess. Structure MicroStrategy to outperform Bitcoin via intelligent leverage. 5, acquire Bitcoin continually while achieving positive Bitcoin yield. Grow rapidly and responsibly subject to market dynamics. Number 7, you issue innovative fixed income securities backed by Bitcoin. Number 8, maintain healthy, robust, pristine balance sheet. Number 9, promote global adoption of Bitcoin as a treasury reserve asset. So those are the principles. You can decide whether those are noble or not noble. Your opinion is okay either way in my mind. The other thing they're doing is they're using volatility for investment strategies. So they basically are securitizing and financial engineering the volatility of Bitcoin and turning it into things like options, convertible bonds, and so forth. And this allows them to find new ways to generate income. They can repackage the volatility of Bitcoin in ways that are attractive to certain groups of investors who don't want to just own Bitcoin outright, such as the bonds, the converts we talked about. So there you go. So what's the upside case for MicroStrategy stock? When MicroStrategy buys $42 billion worth of Bitcoin over the next 3 years, in my opinion, one of these two things will happen. MicroStrategy basically buys all the Bitcoin issuance over the 3-year period, or the Bitcoin price appreciates enough that $42 billion does not allow MicroStrategy to corner the market on Bitcoin issuance. Either way, a Bitcoin supply squeeze is all but assured. Now, the only real downside to that might be if it gets so much of the Bitcoin that it becomes sort of, hey, this is like the game that MicroStrategy is playing, and we all go decide to play another game because we don't want to play Bitcoin anymore because they've got it all, to your point of it being worthless. So that's possible. But at 1% to 2% of the overall Bitcoin outstanding, maybe that doesn't happen. I don't know.
That assumes at today's prices.
Yeah, and again, that was the second bullet point is if Bitcoin goes up enough, then 42 billion doesn't buy them that much, right? So, yeah.
I think that's really good to know, though. Yeah. When you listen to MicroStrategy interviews, he usually talking about how Bitcoin's price is appreciating as they're doing this.
Absolutely. My point is, like, the fact that they're going to try to do this much means even if Bitcoin would not move at all, when they buy all of the Bitcoin that's going to be mined for 3 years, assuming anybody else is interested in buying Bitcoin, how the hell is Bitcoin not going to go up, right? So, yeah, the ETFs are gobbling up tons of Bitcoin. So anyway, there's getting to be what looks to be like, a real food fight for Bitcoin, and that's, exciting to those of us who are Bitcoin investors.
Hey, everybody, Doug's worked really hard on this presentation. It's getting late. We really probably need to keep the questions to a minimum.
Yep, I got 1 or 2 more slides and then we're done. So here we go.
We're going to dinner after this. Lots of great talk. So
here we go. Conclusion. Doug's conclusions. Number 1, buy a lot of Bitcoin.
Yes.
Number 2, consider buying a little MicroStrategy too. MSTR may become the most valuable equity on planet Earth. Number 3, in the future, the likely only way to beat Bitcoin returns will be to own Bitcoin native companies that are very successful. And the last one, just don't forget that companies are centralized entities run by humans and therefore bear substantially more risk than Bitcoin itself. All right, and this is me. I'm Doug. I'm also Elwood, the HODL Barbarian, if you're in some chats with me. I'm a quant. I'm a chartered financial analyst. I'm a barbarian. I'm HODL Barbarian on Twitter, Telegram, and Discord. I used to, at the bottom of this thing, say I have nothing to sell you, but I'm trying to figure out what I'm going to do next if I decide to get out of the corporate world and stop mining fiat. So maybe I'm going to look to getting out of my corporate job and focusing my time on investment management. I think it might be the best way I can serve our community while I enjoy the coming hyper-Bitcoinized future. So currently I do manage the funds for my family office, which includes my dad, my sister, and myself. I may open it up to other interested parties in the future. Not sure. But that's me. So thanks everybody for coming out and giving me a talk.
Hey, thanks for listening. I hope you enjoyed this episode. If you want to learn more about anything that we discussed, you can look for links in the show notes. That should be in your podcast player, or you can go to atlbitlab.com/podcast. On a final note, if you found this information useful and you want to help support us, you can always send us a tip in Bitcoin. Your support really helps it so that we can keep bringing you content like this. All right, catch you later.